Now, before we go into U.S. crude exports and the global backdrop, we just like to remind you, please like, share, subscribe, leave comments. Always love the back and forth. So when we look at exports, they did pretty much what we were saying that we thought that they were going to really do. With gasoline seeing a little bit more of a decline of 73,000 barrels a day, distillate down 108,000 barrels a day. Jet was up a little bit, but again, the biggest shifts really were disti, which had a drop of 108,000. You can see against the 5-year average, we're down 124,000 in gasoline, 216,000 in distillate, and I don't really see that changing all that much on that side. But then on the propane side, we had a big drop of 504,000 barrels a day, but that's timing. We had a huge surge last week, and even with the decline of 504,000 barrels a day, we're still up 301,000 versus year over year and 282,000 against the 5-year average. Those will still remain robust. Now, on oil exports, we were down 7,000 barrels a day, holding at about 2.54 million a day, which we were assuming a little bit of an increase to 2.6, but clearly, we're just seeing this kind of flat line. Now, we expect to see more movements to this week into next week, which again will put us closer to about 2.8 or so. It's still well off of the average, but typically we're seeing some of these loadings coming in at the back end of the time period. So again, that's going to happen. That'll take some time. And then we'll come back into what we've continued to see about 2.4, 2.5 million, just because, again, the demand for U.S. crude and just crude in general remains fairly low. And that's going to be that problem. Now, when we think of distillate, one of our biggest spots that we go into is Europe. So European arrivals of clean product from East Asia, which is where they take some cargoes depending on pricing. They're set to stay at 0 for the third consecutive month in April, though right now there is one tanker that is heading in for May. So essentially May, or 2 days, a few days from now, we'll see that come through. That'll be supportive. And we're starting to see those should increase specifically into Europe because they are starting to come into a reopening and coming into Pad 5 as Asia is sitting on product that they're looking to get into the market. Now, getting a bit more specific, as we were saying last week with gasoline exports, we expected it to come down to that 9-year average. We expected it to come down a little bit more, but given what we're seeing in the U.S., with just demand in general, coming into the summer months, Mexico has seen a little bit of an increase. So that's typically where we sell our gasoline on an export level into Latin America. Brazil obviously is struggling, Argentina the same way, but Mexico is seeing a little bit of an increase. So there's always going to be exports. It's just going to be fairly flattish in general. But when we look at this 9-year average, we think that we're going to continue to see these declines. It's just going to be, again, the kind of those steady moves lower. And then when we look at distillate, we expected to come closer to the bottom of the cloud, and here we are. Just based on what we're seeing in the market in general, it'll start to flatline here. So we're not going to come much further down just because as Europe reopens or starts to reopen, they'll start to plan things a bit differently, and you'll start to see some of this flatline. Now, we could come maybe one more week down, but it's more likely that we'll see a small move up, or at least at flatline here, just based on what the tankers are doing. It's always going to be a matter of when are they flagged for exports. But again, the movement will start to see some of this pushing offshore at this point. Where with crude exports, you can see that, obviously we normally get a spike that's coming up depending on if it's the end of the month or beginning of the month. So based on just what we've seen so far, it's typically coming closer to the end of the month. So we think we'll get an increase, but still firmly be well within, above the 5-year, but really well below the top of that cloud. Now on the propane side, you can see that there was obviously that big spike last week. And we had the same thing happened last year, and then we came back in. we're either going to continue to make seasonally adjusted highs or at least be at the top of this cloud as the market remains robust. Now, Saudi Arabia has cut some of their pricing to be more competitive, but just there's still that elevated demand for product going into the market in general. And now, stuff coming out just now. Chevron moved CPC blend crude in rare journey to U.S. West Coast. So again, we're seeing like the CPC is blend is typically not something that comes into the U.S. So if the cargo completes this trip, it would be the first CPC delivery since September of 2018. As you can see, like there's just the pricing in the physical market and the premium you can get cracking product in Pad 5 just makes it advantageous. So we'll start to see the U.S. absorbing a bit more crude as the physical market remains fairly soft, or at least there's enough available cargoes to get a discount that makes it make sense. So then on the other side, when we talk about ARA, so the ARA, so European stocks had a small build. It was up about 588,000 barrels. Again, we're seeing some of that small movements. We assumed that we're going to be a small build here. And just based on what we're seeing so far, we think that Europe in general is just going to kind of flatline when we're looking at crude stocks, because there is more coming onshore, but we're starting to see a little bit more activity at the refiner level, which will offset. So again, this is something where we continue to see some of this flatlining for the most part. Now, when we look at Fujairah, the data is interesting because we keep hearing about it and we keep seeing the ships, but we're not seeing them show up in the numbers yet. And it's just, is it timing? Is it, trying to play a game? Is it maybe trying to sell the cargoes prior to offloading them? And that's where we're continuing to see some of this shift. So total stocks rose 1.6 million barrels, with overall stocks rising 7.5%. But that was all driven by residual. So heavy distillate resids had a big increase of 16.4%, where light distillate and middle distillate had declines. Now, this is some of the data points that we're going to talk about. So light distillates was down 226,000 barrels, which was a decline of 4.1%, which is the lowest level since October of last year. But the east of Suez gasoline market remains under pressure and is weakening given the increase in some of the run rates, but also due to what we're seeing with Asian demand. So we're starting to see companies come out of maintenance season, more so in China than obviously in India. But we're still not seeing some of these cargoes that are in the water but not showing up here. So it could be trying to maybe we'll start to see some of this movements in general, but likely contributing to weaker gasoline cracks as Apple Mobility data shows what we showed in the second segment of just kind of a range-bound week. But on the middle distillate side, it fell 283,000 barrels, down 8.8% on the week. But the gas oil market was essentially kind of even way, where when you look at it, it's India was fairly bearish, but Europe was a little bit bullish. And here's a good quote, where the gas oil market was going up due to optimism over Europe reopening. But then I think it got sold yesterday on India News, adding that the Asian gas oil market has been volatile. One moment there's optimism and lots of buying, and then the next minute there's not. So, but regardless to say, we see the middle distillate there. We're starting to see it move into Europe and into the U.S., but we still don't see this here. So again, this is something that's a bit odd, because we would have assumed that by this point we would have started to see some of this come on shore. But again, that's something that could just be that timing delay that we always talk about. Now, stocks of heavy resid rose 2.12 million barrels, rising 16.4%, which is the highest level since August 24, 2020. When it stood at 15.5. Now, the thing that we're seeing right now is the bunker side, and we're going to talk about shipping in the Econ show, but there's really no we're not seeing any real tightness. So supply remains ample as demand is just average. So we keep hearing about shipping demand, which is where a lot of this goes, but we're just not seeing that shipping demand. Now, we've also, some of this resid in heavy distillates also goes into the production of electricity in the Middle East during the summer period. And we're just not seeing some of that pull through. So again, It's odd because I would have started, based on the data that we're seeing, because there is more movements. Obviously, China has slowed down a bit, but other Asian nations have picked up on exports. But we're not seeing that reflect in this specific data point. We're seeing it in other spots, but this is one to watch because this could be a big makeup week or maybe some gradual movements. But again, this is going to be interesting because it indicates some of that local demand, which is maybe a bit elevated for the light and middle, but not for the residual. And then maybe we can get some of that reverse as Turkey's locked down again, and we're starting to see some tightness as cases are rising throughout parts of the Middle East. Not all of it, but in parts, which could impact some of this as well. Now, looking at some of the loadings, here we have May. May loadings were already expected to be down because of Angola, because of some of the residual in Europe and the North Sea. But now we're starting to see some of that come back with the North Sea, with Norway and some of the Troll and some of the others at 10-year highs as they come out of maintenance season, which is going to bring more supply back. So when we look at Russia continues to add cargoes. That's going to be, even though Urals are trading at a steeper discount, we're seeing a bit more in terms of where things are going on pricing. Nigeria still remains elevated as some of those. May it hasn't really started to move yet, so we're going to start to look at that. Where Angola obviously cut in May, and you're starting to see June, but May they cut pretty sizably, and now they're bringing it back. Congo, we're seeing some of those crews come back. And then Libya is still reflecting that force majeure, which will start to bring some barrels into May, where we assume that there's going to be another 200,000 put on there, getting us to about less than April and March, but again, still elevated in general. But those, now we've said some of the terms, but let's look at it. So West African crude exports to Asia are set to drop to their lowest levels since October, as shipments to India are getting hit, with some additional going into China. So when we look at Angola, Angola is reflecting that we are seeing some movements increase into China, but the bigger issue is the decline into India. 66 cargoes are due to load in Asia in April, carrying about 2.1 million barrels a day, which has dropped from that 2.18 in March, which was made up of 73 cargoes. And refiners in India, China and India are the biggest buyers, with other destinations, including your typical cast of characters. But the India side and Japanese side is where we're starting to see some of that roll over. Shipments to China edged higher to 1.11 million in April, which is slightly elevated, with Unipec buying with the biggest buyer and other purchasers being the normal. But shipments to India expected to slump 487,000 barrels in April from the 683,000 in March. And we're seeing another knockdown in that, which, again, this is why we're going to continue to see some of these movements, because April was the lowest since December, and we see more pressure going into May, as we still haven't peaked in cases. And that's going to be, again, going to point to more weakness in May and then continued in June, because they did have they essentially swept the market in large parts of the back half of February and then through March. So they're set to take delivery, which is why we think that there's going to be an increase in floating storage within Asia, while we also continue to see a decline in purchases in West Africa, specifically out of Nigeria and so far the Congo, which again is going to increase floating storage within West Africa as well. So Gunvor, now looking at pricing, so Gunvor sold 100,000 tons of Urals to Unipec for May 12th, 16th delivery at 280 less dated Brent, which is a discount to the 270 we saw on the 22nd. Again, continuing to see some of these prices just trying to clear cargoes. Now this is the loadings that have increased. So Urals loadings from 2 Baltic ports in May were revised up after 3 cargoes were added. Total seaborne exports of Urals from 3 main Western ports are now planned at 6.54 tons, or 1.55 million barrels a day in May, which is the highest since April 20th. So we have some of the lowest prices since April 2020, and some of the highest and the highest exports since that time period. So again, this is what we continue to look at. is there going to be enough demand coming back to the market to absorb some of this? And that's where we continue to see some of these friction points as the Russian Ural swaps settled at their weakest level in about a year. So you have Ural swaps at the weakest in level in a year, pricing coming into its weakest as more supply comes online. Now, Sonangol offered 950,000 barrels for June 29th, 30th loading at a 20-cent discount to dated Brent, which was at parity on April 22nd, where when we look at the Ololum Bendo, which was for June 26th, 27th loading at $1 a barrel more than dated Brent. So again, there's some of this friction because you're seeing some offerings coming into at a discount, some of them coming in as a premium. So we're seeing that value add from some of the crude grades. But again, the weakness continues to be there as a lot of offers continue to go up within, I should say a lot of bids going into, I'm right, offers going into Fortes and other North Sea crudes, but we're just not seeing a lot of takers. And I think that's indicative of just prices are a bit too high and a little bit of a pause on Asian purchasing coming out of Europe. Now, crude oil on the water started to accelerate as, again, we had more movements coming into Asia. But you can see just based on what we were talking about just before, it's going to be at a marked, at a drop where some of the cargoes are now being going from offshore to onshore, and just crude in transit remains fairly depressed at this point in time, just given the extensive maintenance season and and just general seasonal shoulder season in general, because shoulder season, we always get a drop, but now with COVID exacerbating that, we had a bigger drop than normal. So then when we look at oil in transit, as we were saying last week, we were going to come back into the bottom of that cloud, but just based on the crossing that we're seeing, because we're not seeing a lot cross on the Platts window. We're seeing a lot of hesitancy in terms of some of these new purchases, which is just going to keep us depressed in general when we think about where are we on that average. Now, the oil, when we look at crude oil and storage, floating storage, we're still well above the 5-year average, but we started to see a bit more of that kind of normalcy, if you will, as we started to see some of that onboarding. But the problem is at this point, there was a leak, or two vessels crashed in China, resulting in an oil spill. So that's going to delay some of the onboarding. So again, these are some of those back and forths that is just going to keep some of that oil and floating storage, especially in India, which again is going to reverberate into South Africa, and other part, and then West Africa. When we think about where is this going to be stored in the near term. Now, when we turn to Europe, you can see that we had a pretty healthy decline across the board in all of the products, with gas oil seeing a nice decline, which again also speaks to why we're going to start to see some of this middle distillate and distillate in general coming from Europe, coming from Asia into Europe. Some of the stabilization, because they've managed this well, and as we start to see some activity come back, we should start to see them try to manage as close to that let's call it 13-year average, because before it was way too high. Now they've made it pretty clear that they want to kind of maintain this level. And when you look at the amount of refineries that are still either mothballed, slowed down at reduced rates, this is again trying to manage this level. Now, when we look at gasoline is moving in a pretty seasonal direction, obviously, much higher as those exports continue to come off the coast. There is an issue in the Rhine. So the Rhine River has the water levels have fallen, and that just means that barges have to cut the amount of weight they can carry because there needs to be a certain amount of clearance from the river's bed. And as the water levels fall, you have to make sure that you can maintain that. So that's also going to slow some of these movements. But realistically, some of this, we've seen kind of that surge in demand that we were expecting from the lockdown ending, or at least people getting more comfortable. Now we think that this is going to go sideways. But when you look at that trend, the trend, obviously, as we go into driving season, you see some of those movements. But just based on what we're hearing out of Europe, there's still going to be less country-to-country travel. and people still remaining fairly local. So a lot of this gasoline, again, will still be targeted into the export market. And then fuel oil, when we think about trying to manage the system, either recracking, exporting, or limiting imports, they're still near the all-time highs. And that doesn't, there's really not much to say that there's going to be too much change in that over the near term. Now, when we turn to Singapore, you can see, again, the residual side continues to see build. So it's the same thing that we saw in Fujairah, where we should be seeing some of this drawdown from shipping. But again, when you look at the average, we've essentially flatlined kind of what we were saying last week, where there wasn't going to be too much to do up or down in terms of opportunities. So that's, again, just going to keep things fairly flat, because we'll start to see residual come down, but middle distillate and light distillate, we see an acceleration, especially with the slowdowns in obviously within South Korea, Japan, Southeast Asia, and then obviously India, which is going to keep us fairly flat in the near term. In the middle distillate side, we're seeing a kind of a counter seasonal increase. Typically, seasonally, we have declines. Instead, we're getting some builds. And just based on what we're seeing in India, we're just not going to see these drawdowns. So in the pregame show, I had said that India demand for crude, or what crude is run, can be anywhere between 6 to 7.5 million barrels, and I was including naphtha in that and liquids. So when we look at just that diesel side, when we're talking about diesel demand never got back to normal, and gasoline did get back to normal. So we expected to see a bigger decline in gasoline versus middle distillate. And the residual is going to continue to keep this fairly capped and elevated, as light distillates did have a nice drop. But this is the one that we think is going to get the biggest reversal, just because of the shifts that are happening in Asia. Now, time spreads have come under pressure, depending on what month we're talking about. And this is also looking at, the Dubai versus Brent spread. You're starting to see some of these movements, which again, they're going to try to price themselves in to cover costs. It's still within a confidence range. It's just technically should promote more Middle Eastern crudes, less European and West African. So again, these are going to be some of those shifts that we're going to look for to see what is happening in the market, and are we going to see an acceleration point. And the Middle East is going to be the one to watch, because we should see more crude flows coming from that region. The cracks have been fairly range bound. They got a little bit of love just based on some of the data sets, but again, there's really not too much to write home about. But hydrocracking remains that key side, because you can make obviously a broader suite of products, and there's little to say that's going to change, especially when you look at petchem. Petchem is dying for feedstock. They need more, so providing a broader suite of products would be advantageous. So again, but realistically, we just see this essentially going flat at this point in time. And in here you can see, even though we've had a rally, we're still at seasonally adjusted near all-time lows. And when we're looking at Singapore, we just don't see anything to really adjust some of those movements. And then turning to euros, you can see that we've had euros again remaining in that range-bound component, where you are getting a bit more demand, but you're also seeing, which is good for obviously crack spreads, and then you're seeing euros trading at a steeper and steeper discount, again supporting some of these margins, which is why you're getting some of that flat line. And the same can be said about the Mediterranean. Now, as Libya starts to come back, and those force majeure barrels are marketed again, you start to see some of those movements. We could see some of this come under pressure. And not so much the crack spreads, but in terms of what is used to create those crack spreads, because the Mediterranean is going to become a bit oversupplied. So Libya is already pricing at a pretty steep discount, and then the euros coming out of Russia will also have to price at a discount. But all of these discounts, again, put the U.S. crude barrel, or crude, just in general, at a disadvantage coming into these markets. And this is what we're talking about with China's super tankers, coming to that 5-year, 4-year average. We think that just based on what we're seeing right now, this is going to shift higher, and we should track pretty close to that average rate. But the shifts are real. So when we look at activity in in China, as we talked about, the government has come after the independents or teapots, and you've seen as we keep talking about, their run rates continue to go down. Now, they do have maintenance season, they do have turnarounds, which is also an implication of why the run rates are where they are. It's just the investigation is going to limit how quickly they can come back as the state-owned refiners try to really kind of ramp up in general. Now, just to kind of put it into context, independent refining, the teapots, they ran about 3.16 million barrels a day in 2020, which is close to Japan and South Korea. So it's a real number. It's not a small number, and this is going to be one to watch as we head into the end of turnarounds. Asian floating storage is now back to the top of the cloud. We're still in this like comfort range here. We thought we were going to get a little bit of a push higher and make a new 2021 high before we started to roll over a bit. Instead, that adjusted. Now, we still think that we're going to get some of these moves back up and track essentially the top of that cloud, obviously not getting to where we were in 2020, but moving within, elevated along that 5-year average. Now, the North Sea remains fairly flat. This will change just because we do have more loadings. We have the end of maintenance, which is going to put more crude within the floating storage, because right now we're not seeing too aggressive movements on bids. So that will keep this fairly elevated and track closer to the 5-year average. Now, West Africa had a little bit of a pullback, came into the top of the cloud. This is the one that we think is going to have a bit of an increase, and we could see it come down one more time depending on timing, but we think it's going to move back up and set that new seasonally adjusted high. And this is the one where when we look at the Middle East, we continue to see that it remain fairly elevated versus 2020, 2019, 2018, but just the amount of new crude coming to the market based on what we've seen in general, that's going to become a bigger problem as, how do we move this oil around? Now, when we look at this just dropped. So Rystad cuts Indian oil demand estimates for May by 915,000 barrels a day to 3.93 million barrels as infections surge. So the oil market faces 1.4 million barrel a day glut because of India is essentially what they're saying. So how does that materialize? And that's where we think you're going to get more Asian floating storage, you're going to get more West African floating storage, and the Middle East more floating storage, because this is happening right at the time that, not to say that their numbers are exact, it could be a little bit less, but that's going to adjust kind of what is in the market in general. And then when we look at Europe has come to that low. The same thing, we think it's going to turn higher, but it's going to stay below that 5-year average, just as we said, as we come to that turnaround, the maintenance season. When we look at Shandong crude stocks, you can see it's just flat. It's still at the seasonally adjusted high, at a pretty steady state. Based on the amount of crude off the water, some of the issues at the teapots in terms of utilization rates, we think this is going to be steady as she goes and continue to be at the top end of that cycle. And then when we look at fuel oil stocks, this dropped because we did get an increase in exports as we headed into the end of April. April exports will still be down April over March, because April will be below March. But then we do see a big pickup in May as some of the state-owns come back. And that's the thing that they're trying to manage. That's why they're trying to keep teapots down, because they're seeing some slow demand locally, as we said, and as we showed in segment 1, with just at general activity levels, which again is keeping some of that pressure, and that's going to be some of those issues that remain in the system, and that they're going to continue to try to manage. So again, a lot of things out there, a lot of movements. The EIA number was fairly neutral. There was some bullish spots, some bearish spots, but clearly the market loved it. So, but what doesn't the market love right now? So these are, again, a lot of moving parts as Asia becomes a much bigger problem, and as COVID cases go higher and things continue to struggle in general. So if you have any questions, please let us know. We always love the back and forth. And as always, thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.